This is Babu with Morgan Stoke, and today we'll be covering how the first-time home buyers plan is a great tool to access extra funds for your down payment. But there are very specific rules that apply, and how exactly it needs to be done, we'll be actually discussing with Paul Davis. Paul Davis is a senior financial advisor with Lionspoint Financial, and who will be reviewing this program with us and giving us a little bit of tips on the program as well afterwards. Welcome, Paul.
Hey, Babu, how are you?
Good. So just to start off, would you mind giving us a quick idea of what the actual program is about?
Absolutely. The RRSP Home Buyers Plan is a plan that allows first-time home buyers to borrow up to $35,000 from your RRSP for a down payment. So you're going to want to think of this as a tax-free, interest-free loan to yourself. So one good thing to know, if you are purchasing a place with a partner, it's $70,000 between the two of you. So if you're right on the verge of hitting a 20% down payment threshold and you want to avoid paying mortgage insurance, the Home Buyers Plan is an especially good deal.
Nice. And how would someone qualify for this program?
Yeah, you're going to want to make sure before you go out and purchase a home, you really want to make sure that you're eligible before counting on it. Once you're approved, then after that, you get to deal with the fund terms and conditions surrounding the plan. But to be eligible for the Home Buyers Plan, the funds that you borrow must be in your account for at least 90 days prior to withdrawal. You can't have owned a home within the previous 4 years, and you must intend to live in the home within 1 year of purchase as your primary residence. And of course, you must be a Canadian resident. So you're going to want to work closely with your financial advisor just to make sure that you qualify and this is the right fit for you.
Nice. So in this case, how exactly would the repayment portion or the repayment part work?
Yeah, you're going to have to repay the funds back. Beginning 2 years from your purchase, you must make annual payments over 15 years to pay back the loan to your RSP. So you have to pay back 1/15 to your RSP. The CRA is going to send you a notice of assessment, and this is going to indicate the amount of the loan that you have repaid, the balance left to be repaid, and the amount of your next payment. So to start repaying the loan, you just have to make a contribution to your RSP in the year that the payment is due.
Nice. And so from your experience, do you have any final tips that you would recommend when it comes to this program?
Absolutely. One thing I see a lot of is people saving their down payment in a savings account. It's not really an effective use of your money. You've worked hard to save this, and you want to make sure your money works just as hard for you. So rather than putting that money into a savings account, making 0.5%, look at investing this in a tax-free savings account where all your growth inside of that is going to be tax-free. Or even better yet, if you know you have at least 90 days before the purchase of your home, think about putting it into your RSP. Now, granted, you do have the eligible room for this, but you're going to be able to deduct the contribution room from your income. Now, you can do this over a couple of years as well, and you're going to get the maximum benefit for this. But then you can take your tax return and bump up your savings. So, for example, someone making $75,000 can deposit $10,000 into their RSP and get an extra $2,500 tax refund on their tax return. So if you do this over 2 years, it's an extra $5,000 towards your purchase. But it's best to work with a financial advisor that has the tools and the experience working with first-time home buyers, because they're going to be able to lay out the pros and cons for you to make the best decision for yourself.
Nice. That's really good information to know. So just to make it a bit easier, if anyone does have any specific questions regarding this, a great way to reach Paul would be through his email, and I will include that in the description, so you can always reach out to him for your specific situations. Otherwise, I just wanted to say thanks a lot, Paul, for dropping by and sharing all this really good information about the first-time home buyers plan, because I do know that it tends to overwhelm a lot of people not understanding how the program works and how it needs to be repaid and just the full scope of it. So this is definitely something that at least gives a general basic idea and can give people more confidence in approaching you in terms of asking you more specific questions. So thank you very much for dropping by.